I'm Leandra Letterman.
And I'm Allison Christians, and I'm back to break into tax.
Thanks so much for coming back, Allison, for this one-time special appearance. I invited you because the topic today is your area of expertise, international tax.
Thank you so much. I love talking about international tax, and I love breaking into tax.
So let's start with, what is international tax?
There's nothing really international about tax in some ways, and then everything about tax is international. You might say, am I talking about domestic rules for cross-border transactions? That could be international. So when someone wants to invest in the US has to decide when and whether and how much to tax them. And conversely, if someone in the US wants to go invest somewhere else, the US has to decide whether to tax those investments and when and at what rate. But it's not particularly international in the traditional sense, right? Where you have different countries getting together and building multilateral institutions and rules. That gets us to a second part of international, which is this pluralistic legal order that we have, which is kind of like institutions and some rules, but a lot more soft law. And if you study in this area, start to realize that what we have is not so much an international tax regime as a transnational tax law order of some kind. Then there's a third kind of international law, and that could be where you compare different systems, different regimes or rule sets. For example, a US system of dealing with a set of rules versus another country's system or set of rules.
So let's take a tour of international tax.
Sounds like a great vacation to me. So let's start with domestic rules for cross-border transactions. So in order to understand international tax, you have to start with, well, what is it in our interest to tax as a country, as a nation? When people come to your country, should you tax them right away? Should you wait? Should you tax them at a lower rate than you do your residents? Should you give them tax breaks to get more money in? And the opposite, when your people want to go invest somewhere else, well, should you encourage that or try to discourage that? And how should the tax system be involved in that? So the first, I think, building block of international tax is to understand that every country in the world stands in relation to the others as either the place where capital is going to go and be invested, which makes you the host or the source country, or the place that the capital is going to come from to go somewhere else, which makes you the home or the residence country. And so each country has the possibility of being in both of those situations with respect to their own people and the assets within their borders.
So you're talking about both inbound and outbound transactions. Can you expand on those concepts a bit?
Yeah, so when you're thinking about international tax rules and you're trying to design your system, you're thinking about other taxpayers from other countries coming inbound with their capital or themselves, right? It could be themselves and their labor that's coming in. And you have to decide how and when to tax them. And outbound, when your capital is going somewhere else. And for a US taxpayer, outbound would be when you either send your money over to some other country to invest in a property, plant, or in stock of a company over there, or you yourself go somewhere and you provide services of some kind. Of course, that's getting a lot more complicated because all of us can be delivering services all over the world right from the comfort of our home offices, like we are right now, Leandra.
Exactly. But how does the government know what taxpayers are doing?
This brings us to one of the most difficult problems in international tax, and that is keeping track of where the money's going and who's got what and what you can tax or not. So information is a big component of the international tax regime or the transnational tax order. Information flowing from taxpayers to governments and between governments.
This is a transparency issue. Information is critical to tax enforcement. And that's true in the international context, just as it is in the domestic context. And one possibility that can arise is that taxpayers are engaging in transactions that aren't very transparent. And one way that that can happen is that the transactions might be known to one government, but that information might not be shared with other governments. So for example, taxpayers may use tax rulings to get negotiated deals with a particular tax administration And at one time, those rulings were kept secret by various countries. So I've written about this, and in particular, the example of Luxembourg, where a set of rulings was actually revealed in a scandal known as LuxLeaks. And then the general public, as well as other governments, found out about the transactions that multinational entities were doing. That scandal helped spark a lot of changes regarding rulings, transparency, and exchange of information.
Yeah, exactly. And that brings us to the other major theme in international, transnational, and comparative tax law, and that is competition. So sometimes people say competition is the fourth policy goal for the international tax arena, where, as you know, Leandra, we've talked at length about equity, efficiency, and administrability. And sometimes people like to add competitiveness or competition to that. I'm not sure if it really is a separate category, but it's important. So we should just talk for a minute about what competition means.
So tax competition is a tool that countries use to attract investment and trade. And that could be statutorily low tax rates, or it could be using something like tax rulings to get a negotiated lower amount of tax.
Exactly right. So you might remember in 2008 that we had a bit of a financial crisis, and a lot of countries had a lot of revenue problems immediately as a result of that. And they began to institute austerity measures to reduce public spending. But at the same time, there were a bunch of stories about multinationals not paying tax pretty much anywhere. And there were hearings in the US and there were hearings in the UK about giant multinational conglomerates just simply paying very low to no tax because of special deals that they had, whether it was through rulings or other kinds of arrangements. And so that actually sparked consternation around the world. And people started saying, well, we need to fix the international tax system. We need to make sure that those multinationals are paying tax.
So that brings us to BEPS, the OECD's Base Erosion and Profit Shifting Project.
Exactly. So this is the response that the international community comes up with. They want to develop a new round of multilateralism in international tax. For about 100 years, international tax had been mostly made up of bilateral treaties between pairs of countries with a few multilateral treaties, but a lot of multilateral soft laws, mostly norms and standards. Now, with BEPS comes a new generation of multilateralism. We see countries trying to reevaluate the level of cooperation versus competition. It's kind of a reset. So for several decades, I think competition had really been the main feature of international tax relations. You know, you might hear people talk about the race to the bottom on corporate taxes, or all kinds of different national systems designed to attract talent or attract capital using the tax system. And BEPS was a reset of that, to reconsider whether we ought to have more cooperation and what more cooperation ought to look like.
A lot of the headlines regarding multinational entities that are paying surprisingly low amounts of tax have focused on the F.A.A.N.G.s.
That's right. Facebook, Amazon, Apple, Netflix, Google, and Microsoft's just really happy there's no room for an M in that acronym. The F.A.A.N.G.s are all US companies headquartered in the US, but they have worldwide reach. So we built this world where it's really attractive for capital to move around from one country to another. And then we get a financial crash that really damages the revenue picture for a lot of countries. And then they look around, and the biggest multinationals in everyone's midst, many of them are US companies, most of them are high-tech companies, and we're finding them really hard to tax. So the first pillar of BEPS was actually about the digital economy and what to do about the digitalization of firms and the rise of tech. But it was the last issue that countries were ready to deal with. And that's what we're working on right now. So that's where the international tax arena is right now, thinking about what should be done about these high-tech digital giants.
So that brings us to BEPS' two pillars, Pillar 1 and Pillar 2.
So Pillar 1 is the digital service tax. A lot of countries thinking about digital services tax as just a separate excise tax on digital services like, for example, streaming fees or advertising. So the second pillar is the GLOBE, the Global Anti-Base Erosion Project. This is very similar to tax reform passed in the US in 2017, which introduced another acronym to the world, G.I.L.T.I, which is the Global Intangible Low Tax Income Regime. Really briefly, the G.I.L.T.I basically has the US taxing active income of foreign companies at the US shareholder level. Okay, this is super complicated, but here's what you need to know about GLOBE and G.I.L.T.I. They set up a world where if one country doesn't tax at a basic rate, then the other country is going to tax at that rate. And so this just ensures that companies are looking at some basic rate of tax, no matter where they operate. And the idea is to undo some of that tax competition.
So let's shift focus a little bit. That's been a wonderful overview of major themes in international tax. Let's turn to now where you could potentially take this as a career.
Well, you got the whole world at your doorstep. You can really go on tour if you decide to go down the route of international taxation. I think the obvious one for students, they're often pointed in the direction of the private sector. So many law firms are dealing with international issues that you could probably find international tax in a big law firm, in a big four, in a medium-sized law firm, and even in some smaller law firms. And you might find tax as an individual issue, maybe connected to migration, refugee law, immigration law. And on the corporate side is just planning, mergers and acquisitions. A lot of times you're going to see tax issues. So lots of paths in the private sector. But in international tax, you get another advantage, which is that even when you're totally staying domestic, you might encounter international issues in government and in non-government as well. So some of our favorite people work at the IRS, and the IRS has to deal with international issues all the time. And this creates a lot of different career opportunities that people might not know about. And students might already be thinking about a career in the IRS. They could expand the horizon and consider competent authority as a possible future for them. And that could involve treaty negotiation, treaty interpretation, might even involve some travel at some point or another. That's fun. And then wherever you have tax treaties, you have tax treaty policy, and that's really in the US Treasury. So lots of opportunities for policy work in this area. And then once you're in government, you can go to intergovernmental organizations, and everyone's talking about international tax. The UN, the IMF, the World Bank, and of course, the OECD over in Paris. So if you'd like to travel and you'd like to go spend some time abroad, you could look at those places and consider the options available there.
Ah oui, Paris, la ville de lumière.
Exactement. Beyond the intergovernmental organizations, of course, you have NGOs, that's civil society. There's groups all over the world thinking about international tax, and not just from a technical perspective, but from the perspective of the contribution of tax to issues around justice, around economics, and around development. So I think there's a really broad range there that I think a lot of students might be interested in if they knew about it. You might learn about some of these things if you have an international tax course in your JD program, but you might not. You might have to go a little further and start considering an LLM.
In which case, a great place to start is our video, Should You Get a Tax LLM?
Exactly.
This has been a tour of international tax.
Thanks for joining us as we break into tax.
Don't forget to like this video, share it with your friends, subscribe to the Break Into Tax YouTube channel, and turn on notifications so you don't miss a single new video.
The F.A.A.N.G.s have really taken a bite out of national revenues all over the world.
And not just a bite out of an apple either. No. I'm going to take a bite right now. This should be me on the thumbnail.
Perfect.